media sector. Rohit Dokania, media analyst at IDFC Securities, joins us from the sidelines of the IDFC conference. Thanks a lot for joining in, Rohit. Before we come to the stocks that you have recommendations on, the first stock which is on everyone's radar right now in the media space is Eros International. What does one do with a counter like that?
Sure. So we do not have a coverage as far as Ross is concerned, and hence I would not like to comment on the recent developments that have happened on this name.
Okay. Rohit, can you take us through your top picks then in the media space? We've been getting a lot of positive calls on Zee Entertainment lately.
Yes, Ekta, so our top picks are Zee Entertainment on the TV side. As far as print is concerned, we do like Jagran Prakashan and DB Corp, which is Dainik Bhaskar. On the radio side, we like Entertainment Network, which is the largest listed radio network in India. And on the multiplex side, we also like PVR. So I think those were the stocks on which we have a buy rating.
All right. You did allude to PVR, but why would you choose PVR over something like an Inox Leisure, which does perhaps show a higher potential for growth?
No, so I think from sector perspective, the multiplex sector has benefited from great content over the past 2 to 3 quarters, and Q3 also looks to be fairly decent, although the initial signs don't point towards a super blockbuster quarter, but it appears that it would be a fairly decent quarter. So it's not that we like PVR over Inox. As of now, we cover PVR, and that's why we have a rating on PVR. Inox has also done very well, both in terms of earnings as well as stock price performance. And if the content continues to be good, I think both PVR and Inox will benefit as far as the space is concerned.
Okay, what are you estimating in terms of ad growth for the TV companies, at least in FY, maybe in the second half of FY16?
Yes, so I think second half of FY16 is going to be very good as far as the TV companies are concerned. As we are already aware, FMCG companies are going through a commodity price decline, and that's why their gross margins are going up. And most of them are investing that savings in the A&P so that they can gain market shares. So I think FMCG will continue to be on a roll as far as second half is concerned. The festive quarter will obviously help, there's no doubt about it. E-commerce guys are also trying to build their brands out. And it's pretty interesting and strange that the new media companies and the e-commerce companies are actually using a traditional media, which is TV, to build their brands, and that's essentially happening because of the vast reach which TV provides. So I think overall second half, I think, as far as the industry itself is concerned, should grow in the range of almost 15 to 16% at least. And the leaders within the industry should outperform the industry growth by at least 200 to 300 basis points.
Okay. All right, fair enough, Rohit. We leave it on that note. Thank you very much for joining in and talking to us. Well, that is the view coming in on the media space. Time for a break now.